Assalamualaikum, my name is Nora Hamdani. So today our group will be presenting about cargo owners and freight forwarders. So as you can see, this is our group members. Okay. And then this is our table of content. So I will pass to the first presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Hassan Shami bin Muhammad Rashid. And today I'm going to give the introduction for our group, which named CQ Company. So we're going to talk about this thing, which is the Negara Exporters. We look at Negara Exporters, a Malaysian seafood company that lost money when their frozen goods are lost and delayed. On the next slide, we have cargo owners. So cargo owners group, they have to manage their goods very properly. Negara needed to give clear cargo details, use good packaging, buy full insurance, and pick reliable freight forwarders. Then for the next slide, which is the freight forwarder. Freight forwarders, they have to handle transport, shipping periods, do patrol, and stay in touch. But their responsibility is limited, so cargo owners shouldn't rely on them for insurance. And this case shows why clear responsibilities and grow marine insurance are key in international shipping. Thank you for listening.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Zalman Saluddin, and I will continue about this presentation on Negara Group cases. So, the first one is, why is it important to have a specific kind of insurance for perishable goods? Because frozen seafood is extremely sensitive to temperature changes. Therefore, specific insurance clauses are very important, which is it is to a reefer breakdown process, which can cover equipment failure. It can also temperature variation clauses, which can use to protect against spoilage due to temperature change during the trip, and also institute cargo clauses A, which is an all-risk policy, which can cover everything except perishable goods, which they still need an additional endorsement. And also delay clause or consequential loss clause. It is due to the late delivery, often excluded in basic plan. So next, on this slide I will explain why Negara claim was being denied. So first of all, Negara's claim was being denied because of several issues. As you can see, their policy is lack of essential process, was based on general plan, and also the plan is not suitable for perishable and include incorrect or incomplete declaration. It is also appears that they assume the freight forwarder insurance have covered everything without even verifying their coverage detail for better insurance planning. So with better planning, much of this from the government side could be avoided. For example, they should have include clauses for temperature risk and also reefer breakdown. They also could have to adhere strictly to policy term, and they could have identified risks like equipment failure or delay in advance, and also work with a specialized marine insurance broker to avoid any kind of accidental variation temperature or machinery failure during their shipment. The continuous of the slide 4, which is other key step, including ensuring covers full of CIF value, which is cost, insurance and freight value, as well as maybe a portion for expected profit. Having contingency plan like backup cold storage and choosing the right type of policy, such as the Institute Frozen Food clauses with warehouse to warehouse coverage. So if they follow the right or the better insurance planning, or they have a better insurance planning, Negara could have avoided everything that they lost. Their claim should be accepted if they follow everything correctly. So that's all from me. Thank you.
My name is Muhammad Kamari Azman. So I'll be the next presenter for the application of marine insurance policy, ethics, players and principles. So now we cover this case as well as the ethical responsibilities and the key players involved. So first, we cover the cargo clause. So this clause is often referred to an all-risk policy. This provides protection against loss or damage to cargo during transit. However, for principal goods, even this need to extend more specific clause. So second, we have instituted frozen food. So this clause covers police damage due to temperature change caused by refrigeration failure, delays or human errors. So it's insured for items like seafood that require consistent cold chain. Okay. Next, freight forwarder liabilities insurance. Freight forwarders can protect themselves from being held liable for losses caused by negligence, poor handling and bad logistical decisions. So this doesn't always cover the cargo owner's loss unless stated in the contract. Okay, so the next slide, we go to the ethical consideration in marine cargo insurance. So marine insurance is not just about policy. This also involve ethics and fair conduct by all parties. So first, we have utmost good faith. Utmost good faith about the insured, and the insured must be completely honest by transparent. The cargo owners must disclose the nature of goods, like the facts. It is a frozen seafood. Failure to do this may invalidate the insurance claims, which may have happened in Negaraku case. So second, we have duties of freight forwarders. Freight forwarders must be ethical by clearly informing their clients about the risk and what kind of insurance coverage is needed. They should not let clients assume they are fully protected without verifying it. So last, we have the duty of insurance. Also have a moral obligation to help clients understand what their policy covers and what it includes. They must explain exclusively related to delay before breakdowns, especially for clients exporting perishable items. So, thank you.
Hi, Assalamualaikum. My name is Nur Hizatul Farshalana binti Nasaruddin. So I will explain application of marine insurance, ethics, players and principles. So let's focus on the key players involved in the Negaraku exporters. The cargo owner and the freight forwarder, understanding their roles is crucial for managing the risk and ensuring that perishable goods like frozen seafood are protected during international transport. All players have ethical duties such as cargo owners must be honest about the cargo nature and requirements. For freight forwarder, should clearly communicate risk the need for appropriate coverage. So next, insurer. For the insurer must ensure clients understand what is and isn't covered and act in good faith while handling claims. Okay, for the cargo owners, Negaraku exporter has a direct financial interest in the cargo. Responsible for managing perishable goods, including ensuring proper disclosure, packing and obtaining sufficient maritime cargo insurance while choosing a reliable freight forwarder. Then the lastly is a broker. Select dependable carriers, produce necessary documentation and maintain open communication with the operation. International agreements limit or the liability for cargo loss or damage. Next, I will explain about the principle. Let's now talk about the key principle of marine insurance that apply in this scenario. The first principle is principle of indemnity. What is principle of indemnity? Insurance is means to restore the insured to their original financial position before the loss. No more, no less. If the policy had been correctly designed, negaraku would have received compensation to cover the value of their policy goods. Next, principle of subrogation. So what is subrogation? This principle allows the insurance company to take legal action against third parties' responsibility for the loss of after paying the claim. For example, if the carrier of freight forwarder was negligent, the insurer could recover the payout. But not least, the principle of contribution. So what is principle of contribution? If multiple insurance policies cover the same cargo, each insurer contribution proportion to the loss. This avoid the double claim and ensure fairness among insurers. So in short, understanding and applying this principle. So along with acting ethically and transparently, for protecting both cargo owners and logistic partners, this case is powerful reminder that insurance is not just a legal formality. It's a strategic tool to safeguard international trade.
So I will be presenting for my part. To prevent issues like faces by negaraku exporters, we recommended 5 solutions and recommendations for you. The first one is regularly review and update insurance policies. Crucial to execute policy exclusions and ensure coverage for financial companies. For the second one is conduct risk assessment. Include monitoring temperature, having contingency plans. Include monitoring temperature, having contingency plans, and considering alternative routes to minimize risk. For number 3, obtain comprehensive insurance. So to make sure to secure ICCA coverage, specific endorsement for temperature fluctuation and delays that can cause spoilage. Furthermore, there is an engaged and expert marine insurance broker who understand the risk and can negotiate the best of unique needs. So last but not least, clear contractual agreements. Define responsibility through Incoterms and a formal contract to avoid misunderstanding. So for the next slide is conclusion. In conclusion, the negaraku exporters case shows why proper marine insurance is important. This happened because of the broker refrigeration system and which could have been avoided and the right insurance process. It also reminds us that cargo owners, freight forwarders, and insurers have a role to play. Honest, careful, and clear responsibility can prevent many problems. So, by following marine insurance rules and working together, we can protect our goods better